28 countries in Europe, 28 different regulation, 28 different fiscal incentives. And solving for that is just like solving a core piece of the European continent. I think you cannot solve the growth problem without solving for the liquidity problem. And the liquidity problem and the elephant in the room is the capital markets.
Europe's fragmentation isn't just bureaucracy, it's breaking the startup flywheel.
If you invest in growth and then you're stuck with your investment forever because you cannot find liquidity, then that's a massive issue. And then the LPs don't get their cash back and don't reinvest into funds and all the rest of it.
But there's a fix, 2 levers that could change everything.
So yes, if you can finance like fund of funds thanks to that and delegate that picking capacity and that support capacity, I would be very much in favor of that. If you triple down on those initiatives, especially at the time when the US is becoming volatile, let's say, maybe there is a willingness to have stability, which we can capitalize on and do an invert brain drain from that perspective.
The proof that Europe needs to act, our own tech champions are getting financed elsewhere.
I'm thinking about Mistral because that's a French company that's quite iconic. Like it's kind of an irony that like the sovereign piece of technology based in France is financed by US funds from the get-go. Like things were too expensive or too big or too risky for the local funds to actually participate in a meaningful capacity. For me, that makes no sense.
The solution requires thinking like a founder.
To put the country and the continent back on track from tech ecosystem perspective. No matter what, I'm gonna have to take a risk where everyone's gonna say, you're completely crazy.
If you're building, investing, or shaping policy in Europe, this is the conversation you can't afford to miss. Join us on this episode of EUVC Podcast as Louis Dussart lays out the roadmap for Europe's tech future.
We're hosting exclusive off-the-record LP AMAs, bringing together the people behind the capital, shaping the next generation of venture funds. If you're raising, planning to raise, or just want the unfiltered truth on how LPs actually make decisions. No pitch decks, no posturing, no script, just real conversations between serious GPs and LPs. Louis Dussart, founder and managing partner at Amcon Ventures, is joining us for an unscripted, off-the-record LP AMA on 18th of September. Exclusively for EUVC community members. Through Amcan, Raida backs emerging US-based, sector-focused managers running concentrated portfolios with emphasis on transparency, portfolio discipline, and conviction-led capital. She also leads Amcan Advisory, guiding family offices through bespoke venture strategies, and serves on the board of Endeavor while sitting on selection committees at Raise Global and Bridge Funding Global. Before venture, Raida drove strategic initiatives in sustainable finance, giving her a rare blend of structured planning, impact thinking, and venture agility. This is your chance to ask one of Europe's sharpest LPs how they really assess managers, secondaries, exit strategies, and what most GPs still get wrong, or anything else you're dying to know. Access to these AMAs are limited to EUVC community members. Don't miss your chance to be in the room. Head to eu.vc/subscribe to save your seat.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Welcome back, everyone, friends of the EUVC ecosystem. I hope you all are. Let's roll up our sleeves and tackle what truly drives our ecosystem forward, because today we're highlighting why European politicians need to wake up and stay woke to the power of our tech founders. Our guest is Louis Dussart from RTP Global, a passionate VP on the ground in Paris and deep in the trenches of early stage tech. Louis brings a fresh voice to this critical conversation about founder-led momentum, policy blind spots, and the urgent need for alignment between the startup world and political leadership. Let's get into it. Louis, that was quite an introduction, my friend. Tell me about your journey into venture and what led you to join RTP Global.
Yeah, absolutely. And by the way, thanks a lot for having me today. I started quite young, actually, in VC. That was my first job ever. I joined a fund named White Star Capital when I was 20. And that was as an intern first. So I did 6 months over there, 2 months in Montreal, 2 months in New York, 2 months in London, which was very intense from a traveling perspective, but interesting because it got me the opportunity to discover the job, but also to discover it through the lens of like 3 ecosystems that are at different stages of maturity, I would say. When New York was one of the most mature ecosystems alongside the Valley, Canada was like in the making, London was spearheading the European ecosystem, but I could already start to see the differences between the three. And after the internship, I was going back to Paris to do a master's in data science. I might label it as AI because it's more salesy, but that's the way they were talking about it back then. And offered the founder of White Star. We were doing early stage investing in between. Basically, the idea was to invest on one side of the Atlantic and then help those companies expand on the other side of the Atlantic. And the White Star line was actually a shipping line in between the two continents. I offered Eric, the founder, to basically help building the presence in France. And for a year, part-time with that master's degree, the goal was to meet with every relevant stakeholder in the French ecosystem, be it founder, be it investors, be it accelerators, be it people on the political side, to actually understand, okay, whether we had business to do in France, but also it gave me a fantastic understanding of the ecosystem at a time which was 2017, when the ecosystem was super young. Actually, there were 3 unicorns back then in the country. And that was the very beginning of understanding, okay, how can we catalyze a tech ecosystem? I then went on the other side of the table because I was attracted by the building aspects for reasons which were not necessarily the good ones, to be fair, and build my own business in between Europe and China. The goal was to help Chinese customers, predominantly Gen Z, discover the European fashion through live shows organized in Europe by Chinese influencers. So think of it as you're an influencer living in Paris. You have 1 million of followers based in Chengdu and Shanghai. You come to APC, you organize a live show, as you're very familiar. You show the products, you explain the brand, and then essentially you have 1 million people coming live into your shop, and the goal is to empty the store's inventory within an hour or two. That was extremely complex for a lot of different reasons, which led me to actually park the business and actually go back to my first love, which was VC. And I didn't know about RTP back then, but they had one common investment with White Star, which was Tier Mobility, the scooter company, which essentially got them into my radar. Took 12 interviews, and that was a very long process, but eventually made it with the goal initially of building their research department, and at the same time to launch France a bit like I did with White Star in that dynamic. And that was 5 years back. So the rest is just progressing within that organization.
And what would you say sets apart RTP Global in Europe?
Yeah, I think it all goes back to the roots of the firm. So the way we're structured is we're a team of 40 people, 15 in the investment team across 3 regions. So essentially you have the Americans that are in the New York office, you have the Europeans between London, Paris, and Amsterdam, and then you have the Indians that are based in Bangalore. What makes us very different is because we're on the same Zoom twice a week. So we really try to instill this international DNA within our operations. I would say we do not have any cultural bias in the way we invest as a team. So we try to have like debates on why things are like they are, and trying to go back to first principles, because if you're a French investor investing only in France, surely there are elements of the ecosystem that you get used to, I would say. But when you're being challenged by Indians and Americans on the same call, you kind of need to go back first principles on why things are the way they are. And that allows you to almost rethink the societies that you invest in. And I think from a perspective of technology, where you need to go back to indeed like first principles, like break the status quo to develop a solution that's more efficient, that's actually really helpful. So I would say the most important one for me is that of perspective, because you see the local ecosystem with a look that is, enriched by a lot of different points of view. And that is extremely helpful, especially to benchmark like the degree of advancement of ecosystem. And when it comes to understanding like the politics aspect of it or the macro aspect of it, being able to benchmark like Europe, France, UK, Germany with what's going on in the US or in India is actually super helpful, in my opinion.
And let's get into the feisty topic that I mentioned in the introduction, the political wake-up call. You've warned that politicians aren't attuned to tech's potential. What do you think that our politicians are missing?
I mean, I wouldn't say they're not attuned at all, but I think it's a very tough job that they have, because at the end of the day, when you're thinking how to boost the tech ecosystem, you don't have a single answer. Like it's a combination of a lot of different ingredients, be it like talent, be it capital, be it like the regulatory ecosystem. Right now with AI, it's also a question of like, how do you secure your energy supply in an economically sustainable way? So you have lots of different facets. And when you zoom into those, like when you're thinking about talent, probably it's a combination of education. It's a combination of what's the existing state of the ecosystem and what skills do people have on the ground. And it gets very, very complex. What it all boils down to is like what sits at the top of their agenda. And when you look, in my opinion, at the US economy and what has been the engine of the US economy in the last decades, I think it's fair to say that technology is playing like a massive part. Like I remember when I was in high school, you look at the list of the top 10 biggest market caps, and that's essentially oil and gas and banks. And now it's probably all tech, if not, probably Aramco is in there. And so I think there is like, there is a massive urgency in Europe when you look at our biggest, companies. And France, I take France as an example. Like you have luxury in there, you have financial services, you have, manufacturing and all the rest of it. Like technology is still not there, and for me, that's a massive, massive issue. And so for me, when you're thinking about the political aspect of it, it's all a question of priority. I think there is like an existential aspect to it. Like, how do we make sure that this ecosystem is flourishing and it's growing a lot faster than it actually does? And that should sit at the very, very, very top of the list, in my opinion. And I can go down into like what that means at all different levels if you want to. But that's the initial aspect, is the sense of urgency and the sense of prioritization in order to accelerate its development.
I actually think that what you just said, let's do that. Let's because there's not many that dare to lean out and give their playbook and say, well, I think this is what we need to do. So let's talk about those levels, line them out, and then say, what do you think is the most important pillars to get built out and fully working in the European ecosystem?
You can break it down into stages at the end of the day. So you have the early stage, that's inception of companies and the early days of a company, let's say seed Series A, early B, from a stage standpoint. Then you would have like the growth stage, and then you have, the exit market and the public markets. So if you break it down into those three things, I think I don't see a massive impact of the political framework on the very, very inception of companies. At the end, it's all about like, talent, and therefore their ability to build into an ecosystem that allows that. And I'm not sure it's going to be a political push that will invent Google or Meta or NVIDIA, for what it's worth. But I think it's really like, how do you allow those founders to build in a good environment? So it all starts with talent. And I think probably it's a function of two things. Like if you're thinking, how do we catch up? It's how do we adapt our education ecosystem so that that's going to yield fruits in 5, 10, 15 years. If you want to hack that, is how do you attract talent that's already skilled to come to build here in Europe? I think we have an extremely deep technical talent ecosystem. When you look at France or at the UK or even at Germany and Italy, like you have amazing schools, be it like Polytechnic, be it TUM, be it Oxford, Cambridge, Politecnico di Torino, Milano in Italy, that is yielding amazing talent. Probably there are elements to it where the European ecosystem doesn't have the same skill set than in the US, because over there you have so many companies that have done those steps multiple times over, be it like on the growth stage and on the IPO. And those are skills on the product management team, on how to become CMO of a publicly traded tech company and the rest of it that don't exist in Europe. To make it short is like, how do you welcome this talent and how do you attract this talent? And that goes by making visas a lot faster. So we had the Passeport Talent in France, which was a way to accelerate the visa application, which I think is great. And I think if you triple down on those initiatives, especially at the time when the US is turning into a place which is becoming volatile, let's say, maybe there is a willingness to have stability, which we can capitalize on and do an invert brain drain from that perspective. So that's what I would say is at the very, very earlier stage. You need seed capital, like pre-seed seed capital. I think that's what the politics, the previous like public initiatives have done, which I think is a great idea. is to have the sovereign funds investing into fund managers that are themselves very close to the entrepreneurs and are able to fill that gap at the earlier stages. So think of BPI, think of KfW, Vækstfonden in Denmark, GDP in Italy, that are able to write meaningful checks to put emerging managers in business and give them the ability to invest at those earlier stages. I don't think that it's the role of the government or the public sort of spheres and initiatives to make this call, deciding so early like who are the right talent to back at seed or pre-seed. But can they enable that? I think yes.
What's your take on the fund of fund side? Just curious because now you describe it, and so I'm an LP, right? We've invested in 13 funds now or so. I am also a venture partner with Iceman Capital, so obviously I'm also a strong proponent of fund of funds. I don't see Joe and Chris working for any government. Those are the founders of Iceman Capital. And I do think that they could probably do a better job than most people that would take a job in government. And in the end, picking a good fund manager in venture is not a simple task. We've seen it, there's a reason why we have such a huge disparity in performance across VC funds. Do you think there maybe should be a shift to having at least some allocation going to fund of funds? Or do you think it sits well with our sovereign institutions?
Yeah, honestly, that's a great question. And why is because I think there is a timing component to it, which is the emergence of emerging managers as a new category, which is becoming more and more deep, I would say, in Europe. And the ability that you need in order to be able to pick them well and provide them with sufficient value to help them doing their business is extremely hard, in my opinion. And that's a role that, again, like I don't think that sits on the agenda of any government or public authority to do. So the answer to your question would be yes, if you can finance like fund of funds thanks to that and delegate that picking capacity and that support capacity, I would be very much in favor of that. I think in Europe, I mean, you mentioned Isomer, that's probably one of the 10 to 15 professional fund of funds in the continent that are able to work with emerging manager. That's not enough at all. The question is like, is there a reason to it? And so that before, I would say 5 years back, you predominantly had established funds that were keeping being funded by the same institutional investors and all the rest of it. Yes. So I think the answer to the question is yes. And the reason why it's now is because I think there is this new category, which is extremely good for the ecosystem, frankly. I think emerging managers is bringing like a ton of fresh air to the earlier stage market, to them being so close to the ecosystem and so close to the founder and so helpful because they're founders of their own, so they kind of get it at the end of the day. But I think it's very recent, and indeed, I think governments should encourage that.
And just in case anyone listened in and thought they heard 15 fund managers or fund of funds that back emerging managers and think, well, isn't that pretty good and sufficient? Fact of the matter is that I think it's fair to say that all of them are sub-optimal size, except maybe for a couple. But then you can argue, are they really doing emerging managers? Because yes, they have a couple of picks, but typically it's spin-off managers from the larger firms, and you can then discuss whether that's, if you ask them honestly over a beer, do you do emerging managers? Most of them would say, nah, we track the market, but honestly, in our full allocation strategy, it's maybe a couple of percent. In reality, we have far too little capital. Like the number of funds that have been tried to be stood up across Europe is astounding. Unfortunately, in total assets under management for money that's truly being allocated to European emerging managers by private fund of funds, I'd be surprised if it's more than 1 billion.
Yeah, that's actually, I don't have I'd be curious to have the total amount of capital dedicated to those strategies. I think there are two things, like there is the amount. And so you're looking, I mean, those funds are relatively small, usually sub 50 million, solo GP or maybe 2 GPs. I think there are two elements to it. One, there is finding anchors and what I would call like anchor as a service, or like funds which are able to anchor those funds. And indeed, those you have very little, and those are almost like leads into a startup. Yeah, they need to take the bet of saying, okay, I'm underwriting this fund and I'm putting those guys in business. And finding your anchor, whenever I chat with emerging managers, it's always the same story. It's like, you never know where this anchor is going to come from. It's you go, you chat with people, you meet people at some point, a high net worth individual or, someone you're close to, or a corporate or a bank that you've developed a relationship with is ready to take the stand and say, okay, here is enough to put you in business, and then something catalyzes. But it's just like extremely up to to anyone's guess. And then you have like a long tail of like emerging manager backers, which are putting smaller checks, I would say sub 1 million, which is starting to professionalize a bit, which was sitting usually into family offices that have such a broad mandate that they can do that. But this also needs to be boosted. For me, this is a very interesting shift on the way the ecosystem is going, and in fact at RTP we're big advocates of this shift.
Let's shift to the growth stage, because you laid out pretty clearly the early stage. I think that was one thing that I would maybe, and I'd love to get your take on that, tech transfer. I think this is a place where when we talk policy, oh my God, I wish that our politicians and our university heads and so on would really get their act together in terms of making it much more efficient to get IP out of universities. Because we're seeing, like, I was with a university not too long ago, pretty successful one with their TTO. And when you then ask them, well, how much have you gotten in real money from the IP that you have then had 15 people employed to make sure that you are able to capture all of this? The money coming in are far less than the salaries that they are spending on making sure that they retain that IP. So it's like, from a pure business decision, it's not even good. And then you think about all the companies that are not being accepted because there are just professors / researchers that decide, no, it's like, there's no way I can do it out of this. It's an amazing opportunity with this piece of research, but I'm not spending 2 years trying to get it out of the university.
Yeah, that's an interesting point. It's fascinating to me, the difference of mentality that you have in Europe and in the US from that perspective, because I feel like universities in the US have been professional at splitting out like pieces of research that have a very short cycle to commercialization and to being businesses and products. When in Europe, it's still like, the image I have of a researcher in the French university is like very, very far from those problems. And therefore, I think there is a mentality shift to trigger. That is for sure. I think something I also want to add from your, I would say the tone of like what you're saying. I also need to put things into context. Like, since I started working in this industry 7 years back, I think a lot has changed. And in the positive dynamic. Like, I think it's easy to say, okay, we're so backwards and we need to bridge that gap. But I think it's also good to emphasize, like, we've done some good stuff. I think now is a question to say, okay, the battle is not won. It's just like the very, very beginning. Now is a moment when we need to truly accelerate, even though it feels like we're yielding the early fruits of the efforts that have been done 7 years back. I can also add the caveat, basically, is like, between 7 years ago and today, I think we're talking about like radically different ecosystems and radically different ways of thinking, which this is positive. And this has been instilled in some countries by the public initiatives as well.
No, I completely agree. It's so important to say that obviously there's being great strides made across the universities on this. I just tend to find that we're still too focused on value capture rather than enabling entrepreneurs. That's my point here. But definitely, we're many times better than 10 or 15 years ago. Let's focus on the growth stage. So some investors say we need, or some founders say, some politicians say we need more growth capital in Europe. Then there are others that say, no, like, growth capital is global. There's not any growth fund that only invests in Europe or only in the US, at least not any that are not government backed significantly. So for that reason, you don't, like, a US growth fund, if there's an opportunity in Europe, they'll take it. They spot it and they will invest in it. So growth capital is not something we can argue that we're missing here. What is your take?
I don't necessarily agree with everything you said. Because frankly, like, yes, it's true that at the global level, you have growth capital available. And if there are outstanding opportunities that are coming out of Europe, surely they will find the markets. And that has been proven, like it's proven all the time. Yeah. I think what you also see is that I think there is a benefit into being in an ecosystem and helping this ecosystem grow and being a strong part of it rather than sitting at the other side of the world and then coming once a year for like a trip and then therefore making 2 checks or meeting with founders that would yield to a check. I think this is a very different mentality. Some US funds have adopted the strategy. And in fact, I think it's super hard because they've been trying consistently to come to Europe and constantly, went back to the US because it didn't work. I think Axel is one of the only like OG US fund that came open shop in Europe and stayed there and is, thriving in the ecosystem. Like, that needs to be recognized. But traditionally, it hasn't been so easy for the US funds to come and establish presence and maintain this presence. So I think, yes, if you look by the dollar amount, there is capital out there. There are 2 things. One, it would be great, especially right now, that some investments are shifting towards sovereignty investment. I'm thinking about Mistral because that's like a French company that's quite iconic. Like, it's kind of an irony that like the sovereign piece of technology based in France is financed by US funds from the get-go. Like, things were too expensive or too big or too risky for the local funds to actually participate in a meaningful capacity. For me, that makes no sense at the end of the day. The question is like the growth capital and the risk that they're willing to take. Indeed, when you're supported by the governments and then you have a cost of capital as a fund that's lower because you have sovereign funds as LPs. I think you also have the political agenda that's in the back end and you need to support the local region. And I think as the ecosystems did for early stage, there needs to be something similar at the growth stages, meaning it's not going to be like you need to have the pump working now and you need to take a bit more risk at the beginning for the ecosystem to structure and to thrive. And I think that's something that the governments can push and can enable. And similarly, I mean, growth is immediately tied to the public markets. Because at the end of the day, if you invest in growth and then you're stuck with your investment forever because you cannot find liquidity, then that's a massive issue. And then the LPs don't get their cash back and don't reinvest into funds and all the rest of it. So I think like this goes hand in hand. Like, how do you solve for that problem? And similarly, that you raise only with like US funds or international funds when you're looking for a massive round in France, in Germany, the rest of Europe. I would say it's a bit a pity that our sort of like darlings of the tech ecosystem go to NASDAQ to list, because then you're bringing value to like another environment, and you're not good enough to like retain. And there are multiple components to that, and it's very complex. But for me, that's just also like that's an existential element, because at the end, when you're hitting the public market, it's not the end of the story; it's the beginning of like a new story where you can actually grow and reach like new heights. And if you're unable to provide that as a service to the local entrepreneurs who are reaching like substantial sizes in terms of company, then you're shooting yourself in the foot.
Yeah, I was about to say, so I still meant one side of the argument. There's another one, which is first and foremost, more volume and growth capital will also just allow us to fund more companies and fund them more fully. So the deals might have been larger and we might have seen more. And I think that is fair to say, if we had more growth capital locally, that would happen, which would be a good thing. Then there's also that you get more competition, which in the end means that you get probably better terms for the founders, which, I think as VCs, at least we like. And then you also get an evolution in the specialization, which is something we've seen very rapidly in early stage, that now you almost wonder why an emerging manager would choose to stand up a generalist fund, because it's not really where the market is moving, because it's not what the founders are looking for. So you just get better capital, smarter capital, typically, if you also have more competition. And I do think that those points are important. And then, as you also ended on, there's the point that if you get a US growth investor in, you will automatically, by that check and by their influence, also orient yourself more towards the US, which means that there's an even bigger chance that you relocate your headquarters and move big parts of your operations to the US, which obviously is not what we want as a European continent.
On that point, it's interesting because for me there needs to be a huge distinction into like selling yourself to the US and selling in the US. I think it's not because you're a European company that like actually going to the US and capturing that market is something that's bad for us. At the end of the day, it's just being smart. Like this market represents 25% of global GDP. Like that's where you have like bigger spending in software from the big corporates. Like that's where you have a lot more like consumers by just the mere counts. Like I think it makes sense. And when you look at the luxury brands, like surely they're very French and very Italian for the vast majority, but they're selling to the US and they're selling to China. That doesn't make them less European. So I think to that point, I think there is I just want to make the difference because you go to the US because you're forced to, because you cannot find the capital locally, and then you cannot find the guys locally that are going to help you get to the next level. Like that's a pity, because that's something we need to solve for. Like that's just, you don't flee an ecosystem because you just can't find what you need and the resources that you need. And then there is smartly saying, okay, we have a great piece of technology. That's a technology that is potentially has a global market. We're going to be smart into where we distribute it to make it grow faster. And then you actually go to the US and potentially not relocate per se, but like capture that market.
And then I was about to say the final thing is also the value capture. So who owns these companies? And the fact that we don't have European growth funds being backed by European LPs, because our European LPs, a lot of the pension funds, a lot of the sovereign entities are actually putting their money in the States, which in the end means that, you know, we're losing out on good returns here. So that's very unfortunate. Let me go to the IPO market, just because it's one thing that we're all talking about, the need for a one centralized market. It's the dream of it's the European dream for a long time. What's your take on that? Is that one of the core pillars of what you think needs to be done?
Yeah, I mean, absolutely. I mean, to your point of like having the cycle working, you need to have like the exit market being deep enough so that capital flows back. And I think when we say capital flows back, it's not just like flowing back to LPs. It's first of all flowing back to LPs so they can reinvest this capital into new funds. And so that helps like accelerating the cycle of one ecosystem. It goes back to founders who at some point could build something different and bring this experience to a new company. It also goes to like employees who are able to like have this capital and take more risk because they have. So for me, this notion of exit market is just the elephant in the room. If you don't solve for that, you're just slowing the entire ecosystem movement down. Now you have a lot of different elements. Like either you're trying to I mean, you have the M&A market, and the M&A market. Surely I've seen a few examples where when you're acquired, you're actually locked for a long time, and then the terms at the end are very different from the terms at the entry. So that's also an issue. I think I would say the ideal highway is the public markets. And why don't you have this in Europe is because, okay, where do you list is even a question that is worth like consultants brainstorming and M&A boutiques brainstorming for a while. Because would you list in the local market because consumers know you better, so it's better for retail investor? Do you go in the market where there is the biggest depth of capital, be it on volume or be it by sheer amount? And that becomes a whole different spiel. So I think at the end, you want a market which is able to absorb like big capitalization to enter the market. That means a lot of volume and a lot of depth. That's something that would make a ton of sense to consolidate different markets rather than having them broken down and fragmented across different regions. So that's one. I think it would make the processes a lot easier also. Like now, just navigating so many different ecosystems and even having those questions is a waste of time. I think the main issue there and is just like the asymmetry between what people say they are going to do and the actual acts at the end. Because indeed, you have 28 countries in Europe, 28 different regulation, 28 different fiscal incentives. And solving for that is just like solving a core piece of the European continent at the end of the day, which is basically, you could say, the capital markets is the conclusion or the result of that, which is almost the root causes. And then you end up in like a conversation which can last for decades. So for me, it's just like the question is, again, you put it at the top, at the middle, or at the bottom of the agenda. Now that the pre-seed and seed is not completely solved for sure, but like 10x better than it used to be. Now that growth is starting to catalyze with the Americans, as you say, coming in. So there are questions that we have about it. I think you cannot solve the growth problem without solving for the liquidity problem, and the liquidity problem and the elephant in the room is the capital markets union.
Well, fingers crossed that our dear friend in the U.S. will slap on a tax on returns from investments in the U.S. That might move some capital over here.
I think there's stuff Europe will probably benefit from at the end of the day. Yeah, fingers crossed, as you said. I don't know where it's going to come from or how. I think those are very complex projects, but
yes.
Yeah, totally.
I don't think like we can see one positive outcome there, but there are definitely also aspects to that which would not be super great. Our pension funds would probably not be too happy. Let me ask you a bit about the role of founders in shaping your future. I know that you advocate that founders can truly be more than just founders starting businesses. They're actually creating geopolitical assets. I'd love to ask you a bit about, if we play as an example this scenario through, where you said, what would happen if Macron or someone in the top of the European ecosystem spent a week with a European founder? What do you think they would learn?
When I saw the AI push that the French president and the government and the state were making, I remember being initially surprised, being, oh wow, it's unusual to see the country basically taking this amount of risk, saying, okay, this is the way we need to go, and we're going now, and we're investing a lot in terms of all the resources that you can think of, marketing, like airtime, like capital, like etc. Before knowing what the result was. And I think doing that, you expose yourself to asymmetric returns. And I think that was a moment when I thought, okay, what's interesting, that's typically what founders do at the end of the day. Like, they feel like the world is going in that direction. You're ready to like risk a ton of stuff because you're going in building mode. You're choosing one problem, one solution to that problem. You're sometimes going deep, sometimes way too deep, but you're making a bet that the solution at the end of the J curve is gonna yield positive outcomes and asymmetric outcomes, like exponentially positive outcomes. I think if we want to have exponentially positive outcomes, you need to have this willingness to take risks, and very, very heavy risks. And I think this risk taking is ingrained within the tech culture. Yeah. So at the end of the day, to answer your question, I think if you have like politics that would spend time with them, maybe they would realize, if I really want to put the country and the continent back on track from the tech ecosystem perspective, no matter what, I'm going to have to take a risk where everyone's going to say, you're completely crazy. It's never going to work. But at the end of the day, that's the only way you get something that's asymmetric. And if you don't understand that and you play safe, things probably will not move. And again, I think the reason why I'm so like passionate about this is, I think if you look at the US and the engine being tech for the growth of the country and the future of the country, and you're thinking we don't have that, or we have the premises of that in Europe, I think the minute that you put this sector back on track and it yields positive effects on the economic growth and all the consequences of that on our social model, on our values, and all the rest of it, that puts a momentum that we kind of have lacked over the past decades. So for me, it's not just a question of, okay, it sits on Appendix A of the second book of the agenda. It should sit somewhere in the top.
Yeah, completely agree. The way I will always put it is, tech is the force that is moving society the most these days. In this day and age, tech, more than anything else, is affecting the world. It is tech that's driving climate change. Honestly, it is. It's maybe the lack of tech, but it's tech that will solve it. It's tech that's driving AI, which might cause job displacement, or the opposite. It's tech that's completely revamping how we fight our wars. It's tech that completely destroyed the childhood or young adulthood for our children that are now age 13, 15, so on, because we gave them, completely free reins with social media. Like, there's nothing that changes society as much as tech. So I think that the idea that our politicians would not be obsessed with figuring out how to engage with tech comes to me as completely baffling. I'd love to ask you then, what role do we as VCs have in making sure that we try and affect some of the change with the politicians?
Yeah, I think I thought about this point like earlier this week. In fact, just going back to the fundamentals of like what's your job when you're an investor in a venture capital fund, and quickly I realized like you're at the heart of like an ecosystem. You have your LPs, and your LPs usually they're like institutional investors, insurance, pension funds, banks, high net worth individual, which usually have like I would say categorized as powerful people in a sense that at least that have an impact and have a voice. In Europe, you usually have sovereign funds, so you have the taxpayers' money in your cap table, and then entrepreneurs. And I think if that's one part of the equation, then you have the founders and their teams and their clients on the other side, and you kind of sit at the middle. And your role is to make sure that all this ecosystem aggregates in a positive way. From that perspective, I think the role of having the information flowing fast and flowing well within all those different people is extremely high. So let's say you're on the pre-seed market and you're able to gather information about elements that are tough from a regulatory standpoint, from a talent acquisition standpoint, from a capital standpoint, and you talk to the investor when the entrepreneur is like kind of heads down trying to build a product and acquire clients for that product. You're able to like identify patterns within those different founders and then understand that, oh, what this guy is feeling is actually a bit more macro and a bit more structural than in this very case. And then you start thinking, okay, if that's structural, it means that it's probably one level up. And then suddenly you start thinking about like the political framework and those stakeholders. And so I think it's not so much I tend to be wary when you say, okay, VCs can change the world. Like some do, some don't. Like it's in any industry. I think they can empower and support founders that truly do. That's for sure. But I think the role is if you can get information flowing well in between all those different parties, that's already like a lot of the job is being done. And sometimes I think it's interesting because some of the stakeholders will not even notice that those are problems that can be solved. Because when you're in your garage and you're like coding your product and so on, like there are some elements that you take for granted in the environment that you evolve in the ecosystem, which as a VC, you think, okay, if this changed, actually, that's going to make the life of those two founders a lot easier. But you didn't necessarily feel it when you're building your company, because that's a problem that's probably should be anticipated or is about to come, that a VC can certainly understand. So for me, that's more like an echo chamber type of role than anything else. But this role, in my opinion, is very, very important.
How do we most effectively try and affect change? So translating, communicating, making sure that everyone's connected. So to say, you kind of just described that, but do we do that in the background, or do we do that from the newspapers? Do we do that from podcasts like ours? What's the approach?
But I think it's I think now here is a combination of like all the efforts of everyone that will bring a change forward. Yeah, some are more salesy and some are more marketingy, let's say. So I think those are two very interesting approach. Some do dinners where they bring a lot of people together, be it founders and builders and operators and LPs, and I think that's great. Others dedicate their lives to building conferences, and we have in Europe like Vivatech and Slush and lots of different like specialized conferences as well that bring everyone together. So those are very active to the ecosystem. Some build podcasts to actually like expand the voice of some people and make sure that this is being heard. I think all of this combined will change. The question is like what instills change at the macro level or can accelerate that? I think some figures, and then you mentioned some founders. Like, I mean, in France, there is for instance, Xavier Niel is like a founder that has been having such an impact on the ecosystem, be it with Station F, with Kima, with his accessibility and his ability to like talk to the broader public. I think those are figures that are extremely important for an ecosystem and that add their piece to the puzzle. I think to answer your question, how do we do that? I don't have the answer. I wish I had one answer, But I think it's like the combination of all of those efforts, and that's how an ecosystem weaves, and that's how you can take it to the next level.
Louis, this has been a conversation where we really spoke about everything around tech policy. I am just so happy that we started the conversation here together. I'm sure we're going to have many more going forward, maybe at Viva Tech next year. Thank you, Louis, so much for coming on.
Thanks a lot, Andreas. It was a great conversation. Thanks.
We're hosting exclusive off-the-record LP AMAs, bringing together the people behind the capital, shaping the next generation of venture funds. If you're raising, planning to raise, or just want the unfiltered truth on how LPs actually make decisions. No pitch decks, no posturing, no script, just real conversations between serious GPs and LPs. Louis Dussart, founder and managing partner at Amcon Ventures, is joining us for an unscripted, off-the-record LP AMA on 18th of September. Exclusively for EUVC community members. Through Amcon, Louis backs emerging US-based, sector-focused managers running concentrated portfolios with emphasis on transparency, portfolio discipline, and conviction-led capital. She also leads Amcon Advisory, guiding family offices through bespoke venture strategies, and serves on the board of Endeavor while sitting on selection committees at Raise Global and Bridge Funding Global. Before venture, Louis drove strategic initiatives in sustainable finance, giving her a rare blend of structured planning, impact thinking, and venture agility. This is your chance to ask one of Europe's sharpest LPs how they really assess managers, secondaries, exit strategies, and what most GPs still get wrong, or anything else you're dying to know. Access to these AMAs are limited to EUVC community members. Don't miss your chance to be in the room. Head to eu.vc/subscribe to save your seat.
This was their finest hour.
Tear down this wall.
It's more than just an alliance. This is a union of values.
Let's start acting.